After shareholders fund, you have a bunch of items under liabilities. Liabilities have two components. Non-current liabilities are due to payment after 1 year. In Asian Paints balance sheet, there are 4 items listed under non-current liabilities. The first one is a long-term borrowing, and it is easy to understand. It can be a loan or similar to loan. In this case, it is not a loan. The company receives sale tax concession from 2 state governments for putting up their plant in the states. The state government allowed the company to collect the sale tax, but retain them instead of depositing with the government. The company has to pay the amount collected at the end of the concession period. The second item is a deferred tax liability. It is equal to tax that we have to pay, but we are deferring to the future date. That too legally under the tax laws. How is it possible? This is mainly on account of different methods of depreciation. For accounting purpose, we follow a method of depreciation called straight line method. Suppose we are buying a machine for 30 lakhs and we expect this machine will have a useful life of 15 years. We charge 2 lakh rupee as a depreciation for computing the profit. Tax authorities gives us an option to charge 15%. That is, you can charge 4.5 lakh rupee in the first year. In the second year, the depreciation is 15% of 30 lakhs less 4.5 lakhs of first year depreciation. Will you take the offer or continue to show the depreciation for 2 lakh and pay tax on that basis, which is slightly higher? We will take this offer, recompute the profit and pay less tax. The difference between tax payable under the first method, which is slightly higher, and the tax actually paid under the second method, which is slightly lower, is called deferred tax liability. It is not a permanent saving, but deferred to future. The two methods of depreciation mentioned here is called straight line method and written down value method. The third item is other long term liabilities. It includes amount collected from dealers and other customers. They are repayable when the dealers terminate the contract. The last item in this section is the provisions. Provisions are estimated future liability. An example of provision is employee retirement benefits. Gratuity is payable when the employee retires, but the liability accrues or adds up every year of his service. We need to estimate this liability and charge the profit and loss account as expenses. We are not paying this amount now. Therefore, the other entry is under liability as a provision. The accounting entry is expenses minus liabilities provision plus. The next group of items are current liabilities, which are payable within 1 year. It has 4 items in the Asian Paint balance sheet. The first one is a short term borrowing. It is easy to understand. The second one is a trade payables. It is the amount payable to suppliers of goods and services. The other current liabilities and provisions are similar to earlier one. The only difference is they are payable within 1 year. For example, provision includes provision for payment of taxes. When you refer balance sheet of different companies, you will find several new items. You can understand them if you follow overall structure of the balance sheet and going through the notes attached to each item.